Yes, guys and girls, welcome back to another BMO video. It is Friday, the 23rd of Jan. Apologies for being a little bit quiet in the Discord. Obviously, with the newborn, you kind of have a lot of meetings you need to go to, hospital meetings, midwife meetings, etc. They all kind of fell into this week. However, I don't think, looking at the calendar, what's today? Yeah, we don't really have any meetings for a good while now, so should be a lot more active from next week. However, let's have a little look at the calendar and we'll see what we've in terms of data. Now, obviously, we spoke about it on Tuesday's breakdown about how we mostly now need to focus on, let me just do this week, we mostly need to focus on what Trump is doing. And it's kind of been the main driver for the time being. Again, that's kind of allowed the dollar to stay a little bit weaker. We did see a little bit of potential positive news that came through from Trump. But then obviously, I don't think markets are really believing it, I'll be honest with you. And then we had the BOJ this morning. We had some decent Australian data, which, as you can see with AUD and the likes of like GA, we are coming in nicely lower, Euro AUD as well. So a lot of the trades that we were looking at are still, pretty good. A lot of them are obviously have moved a decent amount, and the direction has been generally correct for a lot of the pairs. Now, it's pretty much going to be sort of the same as Tuesday, because remember, markets are mostly focusing on Trump and what he says. That is about it. The data's taken a little bit of a backseat. Obviously, likes of AUD, because the data was so good, people were, really happy about that and traded it. But yeah, mostly about Trump. This is all it's about going to be about. Now, obviously, we covered this on Tuesday. And then Wednesday, we had CPI from the UK. Services, inflation did slightly tick higher, though. So overall, pound didn't react too much to it. I don't think it's going to derail the cutting cycle just yet. I think people do want to see how the other data does develop. And then obviously Trump was speaking. He showed some potential willingness to make a deal. However, and then you saw, dollar rally quite nicely. If I show you the DXY, we saw that push here Wednesday, and then obviously continued in the evening. And then, we're back down to being weaker on the levels, because again, there's a few things that are kind of bubbling up, and a lot of it is not really dollar positive. So like we said on Tuesday's breakdown, mostly just be bearish the dollar until something does happen from Trump. That's all you can do. But yeah, nevertheless, we had a bunch of other speakers, but everyone was basically focused on the US. Then Thursday, so yesterday we had employment data. Employment 65.2, really, really good, obviously. But the best thing there was the decent move down in the unemployment rate to 4.1%. It was expected to climb, but, we came in 0.2% lower than where we were previously. And this is really, really good. And this does support, the RBA and their sort of willingness to want to hold, right? This data doesn't tell us that they need to cut. Inflation's, expected to come in nicely lower. That doesn't mean you be bearish a currency, though. You do kind of have to think in terms of context. But a lot of this is really, really good for the AED. And it's good for the economy. And if you obviously pair that up with the likes of what we're seeing with the US issues right now, AUD is a beneficiary of, higher and stronger Chinese yuan, which is also what we've seen from this. So, there is a lot of decent concoctions out there for AUD strength to basically continue. Then Thursday, 1:30, we had GDP from the US. Obviously, the data's not, that was, it was pretty decent, right? However, that doesn't mean you'd be like, oh, now let me buy the dollar. You remember, you don't be like, oh, data's negative, let me sell the dollar. Oh, now data's positive, let me buy the dollar. No, you have to think in terms of context of the market. Is this telling us that now the dollar has to go massively stronger? No, not really. But why? Because markets aren't focused on it. Their focus is elsewhere. Then we had core PCE, which basically stayed the same, didn't say too much there. New Zealand CPI quarter on quarter, 0.6%. It was a little bit better than what was forecasted. We'll have to look at the underlying, not the underlying, obviously the underlying, but we'd have to look at the year over year prints as well. Then today we had the BOJ. Now remember, nobody was expecting any hikes or any cuts. They were expecting hold. However, there was a little bit of hawkishness in the language, which is probably why you saw a bit of dollar yen weakness, which is yen strength, as you can see. But the question is it now going to allow the yen to stay stronger? I would probably say not, just because we've still got that political overhang. That politics is something that is kind of keeping the yen weaker. So we don't really want to be fighting that. Then retail sales from the UK is 4.4% from 0%, from negative 0.1, sorry. And the pound hasn't really reacted. A lot of PMI data today, decent German services, UK services as well, pretty good. US services as well. I'm recording this a little bit later on. Then University of Michigan consumer sentiment did come in at 56.4, and the inflation expectations is slightly weaker. But remember, it doesn't allow the dollar to stay stronger. Why? Because it's not the main driver. And this is what you need to do as a trader, right? And that's obviously the calendar. And in terms of price action, we've obviously looked at it. But in terms of like a trader, right? Or when you're doing fundamentals, did I delete all of my technicals in here? Please tell me I didn't. Okay, cool. Yeah, what was that? As a trader, you have to be thinking always in terms of context of market, right? Don't trade like what I was talking about earlier, that if the data comes in stronger, you now buy the currency, and if it goes in weaker, you sell the currency. Why don't you do that? Because that is basically you news trading, which, as you will know, is not what you want to be doing. What you want to be doing is thinking, how does this data or event apply to the theme? That is it. Or apply to at least what markets are working on right now. So that's what you always must be doing. And that's why sometimes data doesn't really move anywhere. Like we saw decent GDP data from the US that didn't move the dollar. Why? Because people don't care about it. So always think about, or that they don't care about it in at this given time, obviously. But always just think, does the data or event make sense for the current theme of the market, or the current theme of the currency as well is obviously important. So that is myself on the news. Let's move straight on to the dollar, the pound, and the euro. So the USD, the pound, and the euro. Now let's obviously start with the dollar. Remember, this is kind of the main driver right now. Everyone's kind of looking at this and thinking, oh, how is this going to bleed through into like GA trades and Euro AUD trades, etc. And obviously, it is bleeding through everywhere. Minus the, AUD is obviously has reacted good and very nicely to the Australian data. But apart from that, the other bits of data that we've seen out there from likes of PMIs, etc., hasn't really moved those respective currencies. So what we have to think then is, okay, for those currencies that hasn't really moved based on decent-ish data, what is the driver? And like we said, hair's all over the place today. What have they said, or what do we think is, what does markets actually care about right now? And that is all you think about. And it's Trump, obviously. So let's have a little look then as to what news we've had about Trump. It sounds boring in terms of like, oh, we're always going to be mentioning Trump, but unfortunately, that is just the reality of what the market is thinking about right now, right? They don't care about the little bit of the data that we've seen from the US, hasn't really reacted to it. So markets they need a driver, right? Remember, you don't flip-flop your driver, i.e. one week you're looking at this, next week you're looking at that, next week you're looking at that. It's like you just follow that driver until it becomes boring or markets don't really care about it anymore. How do you know that they don't care about it? When they don't react to it. That's pretty much it. So that's all we focus on now for the US. And if you trade equities as well, that's also what you should be following. It's just purely. Now ING's made quite a lengthy paragraph, or not paragraph, but section on the dollar. I don't want to read through all of it because again, we already know a decent amount. But I just want us to read through a little bit of the important points. Now, they said it's been a noisy couple of weeks in FX markets as Washington-sourced geopolitical noise has washed through global financial markets. There is much discussion over Trump's taco on Greenland this week, and increasingly investors are learning to live with these maximalist opening demands as Trump seeks to expand his reach. After spiking to 6.2% earlier this week, 1 month traded volatility on euro dollar is now back to 5.4%, levels seen before Venezuela and Greenland hit the headlines. So looking at the price action, we would say there are three dominant themes. First, a risk-on view of the global economy in 2026 as modest, synchronized global growth. So obviously that's good for equities, right? If global growth should increase, you will see the likes of, the German DAX right now is also pretty good. That should also benefit from good German growth data this year because of what they want to do physically. So all of these, there are a lot of opportunity, right? It's just us as a trader, we have to figure out what is the driver right now and is it correct to trade it? or correct to, are we right in terms of price action, basically? Like, have we pulled back? Is what I'm trying to get at. If you haven't pulled back, you never buy at the highs, obviously, because it's just too risky. The risk to reward is just not there. So that's what we have to be thinking. I think there is a good amount of opportunity this year, just based on kind of what's happening. So yeah, they say about the global growth being pretty good, and obviously that is not good for the USD, and you know, the dollar does not do well in an environment where global growth is good. The second theme remains the dollar debasement trade, where fears over a captured Fed are adding to gains in the precious metals complex. This theme is powered by obviously gold and silver rally. Then they say third, we have seen this week in those currencies with weak physical positions and exposed by the sell-off in JGBs. The dollar looks on the wrong side of the ledger for all three themes above, and the challenge will be whether or not they continue to dominate, and they say probably yes. So from today, we see obviously PMIs, which is what we saw, pretty good. The PMIs were decent, but we haven't seen markets move to them. We favor DXY holding support at 98.2, but the break could challenge the December lows at 97.75, and it seems like we'll probably get there, to be honest, which is down here is where they're talking about, because we're not seeing any positive news updates on the Trump and sort of Greenland, right? So we remain bearish the dollar. You remain bearish until we see positive news. That is it. Like, positive news can come literally right now as I'm talking, and then you see a big spike higher in the dollar. But what we have to, what markets will probably want to see is more of a better update. They don't want to see some potential headlines. They want to see hard physical evidence of this happening. So if you see like headlines, don't think too much about it. Just think, is this cemented, sort of thing. Now, I got some docs that we want to be looking at. Let me just quickly get them out. I thought I had them up earlier, but I think it removed it off the tab. So let me just quickly open it for us. Okay, cool. So let's this one over here. Now let's have a little look at UBS. And what they're saying is selling downside in AUD USD. Interesting. Let's have a look. Although geopolitical factors have broadly dictated trends in global foreign exchange markets recently, Australia represents a notable exception. The Australian dollar has found support from robust domestic economic indicators, prompting both our team and markets to revise forward expectations towards interest rate hikes rather than reductions. Consider Thursday's strong labour market report. We now forecast the RBA will raise rates in Feb. Interesting. Which should strengthen the AED further. As a result, okay, I get it. I thought they were selling AED for a moment. I was like, what? They're looking basically for selling AUD USD downside positions at 67.50 over the coming month, which was, just having a look. Okay. I mean, we've kind of moved a decent amount away from there over the coming month. I just want to see if they do talk about AUD dollar in a little bit more detail here. I don't think they do. That's a good one. We'll read through that when we move on to, we'll look at it on the euro. Why not? So yeah, I mean, apart from that, I'll just quickly glance over at Bloomberg. I want to see if there's any update on what we're talking about. Let me just share my screen. Don't know why it's not loading. There we go. So Trump renews Iran threats. That's fine. Open up this, and we was going to read through this. So dollar sets for the worst week since June on US policy nightmare. According to the AI description, takeaways is dollars poised for its worst week since June, as unpredictable US policymaking weighed on the currency ahead of next week's Fed's reserve. Obviously, we saw a big drop in the dollar, which is, I'm sure we all know, and risks around the central bank's independence and expectations that the Fed powers will be swayed by Trump's to lower rates are also weighing on the dollar. Investors are whipsawed this week by Trump first brandished tariffs on Europe over his bid for Greenland, then abruptly dropped them after striking a deal with NATO secretary. And the fact that the greenback is sliding, even as US yields have risen, will keep the Fed on hold, suggests political risks are a bigger factor for the currency than monetary. So it's like Trump can basically just come back and do something else, and it's just going to allow the dollar to go back to being weaker. So I don't feel like, the markets need really positive, strong things to trade, right? They don't want to trade on if, buts, and maybes. Only speak facts, right? That's what they want to be. Ball knowledge required for that video. But we have to the markets only care about things that are pretty, I don't want to say set in stone, because they're also able to trade potentials, but it needs to be quite likely potentials, right? And they right now think this is quite likely that Trump may go back on his word, do something else, and it's just going to create more issues and volatility. So they need really positive things to happen before they change their view on the US right now. So have we seen, the question we now have to ask ourselves is, have we seen anything that allows us to change? No. So we don't change. It's kind of simple as that, really. So with policymaking, policy volatility rising, USD has become the release for valve for US risk premia. This explains why the dollar took a sharp turn, a reversal this week, despite markets pricing out further cuts. Skewing dollar bearish, they're kind of looking at it on the data there. And as the dollar and the US stocks fell in tandem earlier this week, it will be a reminder that the greenback may no longer be a shock absorber for equities. And the 3-month correlation between Bloomberg Spot and S&P has nearly dissipated again, supporting higher hedge ratios given weaker portfolio, compelling alternatives abroad, plus the return of tariffs as cohesive tool to threaten the same forces that led much of the dollar's decline last year. So I think they're talking about, I need to double check what their correlation is about. I think they're talking about how, you know, how the people say the correlation where equities go high and the dollar goes lower and vice versa. They're saying that that is now nearly dissipated in terms of the correlation. So again, does this scream, ask yourself, does this scream positivity or negativity? It obviously screams negativity, right? So do you now want to buy the dollar as a result of this? No, of course not. Why? Because you don't want to be buying into the US when there's bouts of negativity, do you? So that's all we think about for now. So that is myself and the dollar. I mean, it's quite simple. Like I said, you remain bearish. There's no positive news coming through. You know, we saw a potential deal happening with Trump. People they don't believe it, right? They just don't have faith in the US. We don't want to be buying the dollar when there's no faith in the US. Now, in terms of the pound, the pound's quite, I don't want to say it's easy to trade right now, but there's not really big drivers for them. I.e., people aren't too overly focused on them as they have been previously, of course, because right now it's like issues in the US is creating AUD strength, GA sells. It's creating, I don't know, New Zealand dollar strength as well because of what's the word? It's beneficiating from the yuan, the Chinese yuan, euro, pound, New Zealand dollar sells. So it's kind of just sitting in the middle right now, and just following everyone else on what they're doing. So I'm just double checking to see if UBS has spoken about it. I don't think they did from what I remember. No, they haven't. And that just goes to show you that people just are a little bit quiet on it right now. Let me just filter this straight to the pound. So in terms of the data, obviously CPI, but like I spoke about at the start of the breakdown, it's services that markets are a little bit concerned about, and it kind of did stay ever so slightly elevated. Doesn't change too much though, in terms of they're not going to be, now the BOE doesn't, the BOE doesn't need to cut. It's just that, okay, this is interesting. Maybe let's see more data sort of perspective. The reason I say that is because if we look at services inflation over the last, couple of months, we saw a nice trend starting to form. So we had 1 month, 2 months. If this came in lower, then that confirms a trend, right? So what we need to see is, does the data that supports this also come in lower? So therefore you'd anticipate a nice drop in services inflation in the next print. And that should allow the BOE to continue to cut. And that's all they're doing, right? They're pairing it with the data that we know in terms of forward looking and thinking, does this support the idea that we see more cuts? If it's a yes, then they know that services inflation is eventually going to come back down lower again. So they're not really jumping the gun, essentially, to say, we saw a slightly stronger service inflation, maybe the BOE does need to go. They're thinking it more broadly, basically. So I think, it's just based on price action alone, it just kind of does tell you that. I mean, GCAD did come up to this high, which we've reacted from already, but to be honest with you, I think just because of how weak the dollar is, this will probably break through. Pound Swissy, surprisingly, actually recovered a decent amount. And GJ obviously should continue to go higher. There's nothing really that we saw from the BOJ earlier that is going to allow the yen to strengthen, because it still has political issues. Once that goes away, maybe we'll have to see. But yeah, right now there's just nothing telling us that the yen has to be strong. Even though the dollar's weaker, which is technically good for the yen, it's just that this issues around politics is just overwhelmingly negative for the yen. So it's kind of just destroying what's happening with the sort of correlation between the dollar and the yen. GN, I mean, we have reacted from the supply zone on the 12-hour, 8-hour, yeah, right here. However, we haven't broken structure, so I'm not really focused on it too much right now. This is still technically not, that is not a lower low, sorry. So therefore, this could just be an anticipation of another higher, and then we may just come slightly higher because, again, I think GN can still come lower. Maybe we'll just come a little bit higher, maybe just down to this supply zone here, but we would still have a bearish bias, in my opinion. GU, we are broken still, and remember, this is largely dollar driven. I mean, just looking at the DXY today, you can see that people are still looking for sells on the dollar. And it should still be the case. There's no real positive thing that's happening. That just tells us that the dollar needs to strengthen back. And obviously that should allow GU to continue to push. How do you get in? Let's see. I mean, obviously we'd like it to come down to this daily demand zone right here, 12-hour, and then we have a little 8-hour demand zone right here. And that actually is pretty good because it lines up with 135 hold as well. So there's two confluences, which is good. Obviously, the more the confluences, the better. So it lines up very nicely with 135. It still makes sense because of the dollar and what we know about the dollar. And that's where we'd want to buy from. We don't want to be buying here. We want to be buying slightly lower. So, I mean, apart from that, nice, quick and simple for the pound, just because nothing's really, I just want to double check pound sterling. I know they generally always have something to talk about the UK. Obviously, it is stronger, but they are mostly looking at the dollar, to be honest. Euro GBP, how's that performed so far? We have pulled back quite aggressively, though. But apart from that, across the board, it's gone a lot weaker again on the AUD. I guess if you look at it broadly, then yeah, I guess it is pretty strong. But in terms of the pairs we are looking at, it hasn't performed too well. But broadly speaking, yes, it has done okay for this week. So let's just have a see, and I just want to double check and see if they do say anything of interest here. They say the PMI data survey showed UK private sector companies experienced a solid increase in output levels at the start of 2026, with the overall rate of expansion reaching its fastest for just under 2 years. Importantly, we watched PMIs bounce strongly to the start of the private sector growth at a 20-month high. While growth continues to be driven by a service sector, and in particular financials, the manufacturing sectors also continues to report a gathering recovery. That doesn't mean you should go bullish the pound, though. I don't think there is positivity in the future for the UK in terms of the BOE. They want to, of course, cut growth as well in terms of fiscally what happened at the autumn budget last year. That doesn't point to me positivity in the UK. So it's not like right now, yeah, it could probably go a bit stronger because, again, the dollar would make sense. CAD right now, of course, would make sense because the dollar is a bit weaker. But it doesn't make sense for it to go stronger against AUD and NZD. So like I said, selectively choose the trades that is benefiting the most when we have this issues with Trump. So who are benefiting the most, all of this, AUD and NZD out of G10 right now. Okay, cool. So you want to be bearish the pound against them because you can't really get overwhelmingly strong pound against those who also have really, really strong fundamentals supporting it. So you'd rather be bearish pound against them. However, the pound can be stronger against the likes of the dollar, the likes of the yen, the likes of the Canadian dollar. So like I said, selectively choose because I think those pairs, a lot of them, there's a lot of opportunity. It's just for us, we just, like if we're looking at price action today, we do have to wait for those pullbacks like GN. We need to wait for price action to break structure. We're in a supply zone, but we haven't broken structure. GU, we wait for a nice pullback to 135. GJ, you can probably go higher if you're happy to trade it, I guess. We're seeing, I'm not going to leave it alone, I don't really trade Swiss. GCAD, like I said, probably could break through the supply zone just because fundamentally right now, the pound is a little bit better off in this environment when comparing against the Canadian dollar. Like I said, could go bearish because the AUD has a lot stronger fundamentals, both externally because of Trump and internally because of data. So remember, selectively choose who is better off right now. Now, in terms of the euro, I'm trying to think what we could talk about the euro. I mean, data this week, all it has been is just PMIs. And PMIs right now, people don't really care about it, to be fair. They're going to talk about it, but what we have to ask is it really a main driver? Probably not. So when you're trading the euro, do it similar to how you would when you're looking at the pound. So like, for example, even though the euro is fundamentally decent still, It's not like it's having a lot of issues, right? It has a lot of positivity in the future. It's just that Australia was a lot better off. So you'd rather be bearish Euro AUD. So we just need to selectively choose right now who we want to be buying the euro against, and that's all we think about. Events this week have seen the most conclude that Europe needs to be the master of its own destiny. This time last year, Secretary Pete Hegseth was rubbing NATO and driving Europe into more defense spending and more German fiscal stimulus. Eurozone 10-year swaps jumped by 40 basis points and quickly dragged euro dollar some 5% higher. And obviously that was around, I think, February, March time, if my memory serves correct. It is hard to see similar moves again happening unless there is some surprise extra fiscal stimulus emerging. But this is a theme that will provide support to the euro on the dips. And that's like we said, fundamentally in the future, it's still pretty good. Like we know this should be quite good for growth. So we have to ask ourselves, does the sell-offs a warrant because of fundamentals, or is it because of something new that might have popped up, but it's not really a big driver, or is it just profit taken? If it's either one of those, that just doesn't allow you to change direction in terms of your trade, right? It just thinks, okay, it's nothing major. It's just going to be a pullback. Let me pull back into its demand zone on like euro dollar, for example. Now let me sell it off. Let me buy euro yen, for example, if you want to, etc. So I think, yeah, I'd say it's still pretty good for Europe. It's just, again, New Zealand, AUD in particular, is a lot more better off than Europe in terms of their data. Now, let me double check UBS. I think I did see euro on that. Oh, no, I didn't. I guess I was wrong. But let's look at what they're talking about euro AUD in terms of Danske Bank. So they're looking for a euro AUD sell, and you can see that they are, they're targeting quite a decent move there. 165. We're currently sat at 171. And they're looking for a lot more downside on euro AUD. And like we spoke about earlier, it just makes sense because even though both economies are good, that doesn't mean you don't trade the pair, right? You have to find where the discrepancies are. And the discrepancies is that Australia is a lot better off right now in terms of their data. So we're not going to let this opportunity slip through our hands because we're trying to wait for like night and day divergences. We want to be tactically trading, right? We're not investors, we're traders. So yeah, if there's an opportunity, we will happily take it. And they say ease in financial conditions and recovering manufacturing momentum supports the outlook for cyclical assets, but geopolitical uncertainty overshadows Europe despite the tentative deal on Greenland. We think a short euro AUD position offers an attractive mix of exposure for the Asian manufacturing and industrial metals alongside positive carry. The position provides a hedge against the risk of higher natural gas prices in Europe. And obviously, why are they affected by that? Because Europe is a big importer of gas, similar to, when it happened around, I think, a couple of years ago, when the Ukraine and Russia war all first kicked off, gas prices spiked really, really aggressively, and the euro came in massively lower because they are huge importers. They would be affected the most by that. And they're still a very, very large importer of natural gas. They say they recommend euro AUD short position with a soft target of 165, hard stop loss of 176, and a horizon of around 3 to 6 months. So that is a good trade. I would agree with that. And yeah, that just adds to what we've been speaking about, right? In terms of don't just use these docs, these research as be all and end all. This is what I must do. Use it as a rough gauge of what you're looking at is correct in the eyes of other people. Meaning, I am looking at X, Y, and Z because of X, Y, and Z. Okay, let me see if anybody else has said something similar. Oh, okay, they have. Okay, I'm clearly on the right lines. That's what you should be using them as. So that, like we spoke about earlier, we were still bearish euro AUD, and it's something we still want to do. And we just use it as like, oh, we're on the right side of the market, and that, or at least from Danske Bank's perspective. And we agree with that. Now, we're not going to figure all of it, of course. You're more than welcome to. I believe Drew did put a screenshot in the Discord today about it. But if not, it should be in the bank research section of the Discord. So yeah, read through that in your own time. You can pause it, of course, as well. But yeah, I would agree with that. I would agree. Now, apart from that, I haven't got anything else to add. Remember, data this week, as we spoke about on Tuesday, is pretty dead. Nothing's expected to happen. PMI data was pretty good, but hasn't really been the main driver of the euro. So right now, yeah, I would purely mostly focus on the directions we are trading anyway, like euro dollar longs, this week, of course, especially. Euro AUD shorts, Euro New Zealand dollar shorts. Euro GBP is an interesting one. I'm going to have a little look into it a bit further over the weekend. Euro Yen, I guess, if you really, really want to trade it. Euro CAD, probably a bit higher, although we are quite choppy on this pair, but it would make sense for it to go higher. It's just that I think the best opportunity in terms of percentage moves is Euro AUD, Euro dollar, and Euro New Zealand. Euro GBP was the one we were looking at when it had this nice big old push. But then for some reason, we've just really pulled back quite deep. And it's just, yeah, it just doesn't really entice me, to get in right now, because price action doesn't really suggest it. Now, apart from that, technicals, Euro AUD, let's see. So we spoke about this on Tuesday, looking at historical price action. We pushed into the supply zone, which was on the 8 hour, 6 hour-ish, and it lined up nicely with 174.500 and had sold off quite nicely now, a few hundred pips there. And where can we get in on the pullback? Well, obviously, in an ideal world, it would be all the way up here, at least at the minimum. However, I don't think we have a reason to pull back that deep. So I do believe it will probably be quite shallow. So for example, like here and then a nice sell-off. I don't think we have that opportunity to pull back, 180 pips or so, 190 pips. It just hasn't got that reason. So that is probably out of the equation. We'll still mark it out because it's still valid, but I don't think we'll get there. I probably do feel like more we'll get towards the prior lows, and then we'll start selling off again. At 172 back at least a maximum, in my opinion. EuroCAD, quite choppy. I mean, I'd probably want to be buying this pair, but price action is really ugly, so I'll leave it alone. And similar for Euro GBP, this surprised me quite a lot, so I will get back to you on Tuesday about that pair. Euro Yen, obviously we saw a big sell-off, and that's quite understandable. We had a decent amount of hawkishness from the BOJ. However, I don't feel like this is just that meeting where now suddenly we go long the yen. It's just because political situation in Japan is still overhanging. So markets need as less friction, I guess, when they're entering. And obviously political situations are quite, it is quite taxing on your trade, right? And on your mental trade, i.e. like you feel like you always have to constantly monitor the political situation, see if anything's changed. That's quite, demanding, I guess, in terms of mindset. And people don't want to do that. I know I for sure would not want to do that, where I'm in a trade, but now I have to constantly monitor a political situation. If it's stuff like the Trump trade, then it's obviously a little bit different because that is the only driver. And that's unfortunately we have to do. But this pair, we don't have to trade Euro Yen, even because there's better opportunity out there. So like I said, the upside to me seems more likely right now than downside. Unless something changes politically, then sure, maybe we'll get in to a downside pair. But yeah, for me, it just doesn't make sense. Euro New Zealand, it's actually quite similar to Euro AUD. And I do feel like we'll still go lower. We were looking at downside on Tuesday anyway. It has prevailed, I guess. It didn't come quite high though. We came straight back into this sort of prior low. It lined up with 201,500, just below 201,500, and then we started selling off again. And what you might notice about this pair is it does move quite aggressive, as you can see. So I feel like it's actually kind of similar in terms of price action to Euro AUD, where it's probably going to be quite shallow in terms of pullbacks. There's no real reason, a big reason for Euro New Zealand at current price action to pull back, at least 50%, so around there, 200 pips, right? It needs a big reason for that to happen. So yeah, probably quite shallow on pullback. So be a little bit aggressive with Euro AUD and Euro New Zealand. I do feel like it will pay quite nicely. It's just that don't be overly aggressive, i.e. trying to sell the lows. Wait for those pullbacks. If they're quite shallow pullbacks, then it is what it is, right? But wait for at least some sort of pullback to happen. So that is myself. And then lastly, euro dollar, I guess it can still go higher. There's no real reason for it not to. So just think about the next high, 118, and then 119 would be the high after that. We don't want to aim any higher because then we enter 120 territory, which is completely like, it is definitely possible we can get there. We just have to think, is it possible right now? And possibly not. I think people want to be waiting for a lot of the fiscal stimulus in Germany to come through before making that assumption of 120. So we'll probably come to around 118, maybe 119. But 118 is pretty for me is quite high probability. And then we can monitor the Trump situation still. Is people still having hope? Are people still having, are they still doubts about the US political situation? If it's still doubts, there is no reason for the dollar to strengthen. So you remain bullish euro dollar still. So that is myself on all three currencies. Let's move on to the AUD, NZD, and the Canadian dollar. So the AUD, CAD, and NZD. Now, very, very quickly, obviously, with Australia this week, we have had some employment data and unemployment rate. That was very, very good. Now, let's quickly just refresh our memory about what that data was. But to put it quite frank, the data was pretty decent. So just filter. So obviously, we spoke about CPI on Tuesday's breakdown. Employment change, 65.2 from negative 28 was expected to go to 28K positive. That's normal figures, to be fair. 20K has been roughly the average of employment change. Obviously, you do have spikes on either extremes, but 65K is very, very good. I don't think it will hold as well in terms of like how strong, but it will go back to being normal in terms of 20 to 30K. But the unemployment rate did drop quite nicely by 0.2%. That's very, very good. And what that basically tells us is that what reason is there that the AUD can't strengthen this year, right? That's the question we have to ask. Is there data that points to being weak, that now the AUD has to go weaker? No, not really. Is the RBA a factor? No, they're quite hawkish. Some people are expecting a hike next month. Are there external factors out there that is really going to drive the AUD lower? Probably not. Sometimes you'll have little bits and bobs out there, but nothing like game changing in terms of big issued data. So for me, I don't feel like there's any reason for the AUD to weaken. What does that mean? You basically pair the AUD against who is weaker, and that is it. So Euro AUD downside would make sense. Euro is technically weaker than AUD, but not weak overall in terms of their fundamentals. The yen, of course, AUD JPY, AUD USD longs, GA sells, NZD. I'm just trying to think of another. AUD NZD is going to be a tricky one, but I think AUD will probably pull it out of the bag. So there's a lot of opportunity out there. Yeah. NZD, AUD CAD upside would make sense. So there is, like I said, a lot of opportunity. You as a trader basically have to figure out where can I enter from that makes sense for value in terms of value, right? And for me, let me just open this up in a new tab whilst we're here. For me, I don't feel like there is any reason to be bearish. So we only look for longs, basically. How do we do that? Like I said, wait for those pullbacks to happen, and then we'll continue to go long. I'll just double check and see if there's been any other brand new update on AUD. It's kind of similar to Tuesday's breakdown, where it should continue to benefit from stronger yen as stronger Chinese yuan. But again, I just want to double check if anyone's spoken. Give us a bit more of a guidance on the AUD. US actually has talking about this time. They said the labour force showed strong gains. Unemployment rate fell to 4.1%. Employment rose by 65K, obviously mostly full-time. And underemployment, interesting. Unemployment hit 5.7. And these trends point to a robust labour market, likely prompting the RBA hikes in Q4. Trimmed mean CPI is if the Q4 trimmed mean CPI is 0.8% or higher. We now forecast AUD to be at 71 by mid-2026 and 73 by year-end. We favour long AUD positions, especially against Swiss, CAD and the pound, with entries at or below 67. So like they said, they want to be long those pairs, but it's best for us to wait for those pullbacks to get in before we get in, of course. So yeah, they are still quite bullish, the AUD. And like we said, there's no real reason for us not to be. NZD, I don't think there's any major news out there. Obviously, we did have CPI, but overall didn't really do too much in terms of changing the narrative. We did see the fourth quarter on quarter 0.6%, a slight rise relative to the forecast, but it did drop from the previous print. So I just want to double check then what the year over year print did, because that'll give us a good guidance. Okay, so it looks like that rose. Yeah, that's risen. So that should allow the RBNZ to remain on hold as well, and that might bring forth some New Zealand dollar strength. That's basically how you interpret it. And obviously couple that with what we're seeing in the world right now, it is kind of allowing the NZD to strengthen also. Like I said, they're probably the only most difficult pair out there to trade right now would be AUD NZD, because both pairs are quite nice and strong. So like I said, it's going to be, the AUD probably will slightly take it. It's just that how are you going to get him, like, sort of perspective? It's going to be quite choppy, like this price action, quite choppy, but it does eventually go higher. I feel like that's probably what will happen with AUD NZD. It will look choppy, but it should go higher. So overall, myself on the New Zealand dollar, haven't got anything else to add apart from CPI was a bit stronger on the year over year, and also the quarter on quarter relative to the forecast. That does allow the BNZ to remain on hold for longer, which, as we spoke about, should continue to strengthen the currency. Apart from that, I've had a look everywhere else, and there's literally no one else is speaking about the NZD. Similar for the AUD, actually. There's no major data out, or not data, but news out there, sorry, that gives us a definitive working point in terms of well, docs and news, right? So it's going to be exactly the same as Tuesday's breakdown. AUD and NZD should remain pretty strong. As you know, the yuan is also pretty strong, which should support the AUD and the New Zealand dollar, of course, because of their trade relationship with each other. And the fact that the data in Australia especially is very, very good. So the AUD remains stronger, as well as the NZD. How do you do that? Well, basically nothing. Okay, who's weaker? AUD CAD, obviously upside. AUD Yen, if you want to trade that, upside. AUD USD, upside. NZD USD, upside. NZD CAD, upside. NZD Yen, upside. Euro New Zealand, downside. Euro AUD, downside. So you see how you're pairing it, right? Downside, downside. Like, you can see how it's bled through everywhere. So that tells us that people are really, really, really driving Antipodean currencies. So Antipodeans are AUD and NZD. So that's all we trade right now, right? Go where the most value is. Go where the most likelihood of a trade to work for you is, which is right now in Australia, followed by New Zealand, then followed by other ones out there that you like to trade. As obviously, as long as you don't want to be long the dollar. So apart from that, CAD as well, it's kind of quiet for them. Obviously, we saw CPI. We spoke about that on Tuesday anyway. You can read through that. I'll watch that breakdown. But yeah, right now, CAD is kind of in a hard, between a hard and a rock place, right? It does not, it's not really benefiting in this dollar weakness story. Yeah, it's not really benefiting in this dollar weakness story. But UBS says the Bank of Canada will likely hold rates. A meeting takes place on the backdrop of softening Canadian data, with the labour market still showing signs of slack. This week, a domestic momentum had led markets to scale back expectations for year-end tightening, reinforcing the view that BOC is likely to remain cautious and keep rates on hold at 2.25%. It will be important to see whether this meeting opens the door for further cuts or if the current stance remains unchanged. In contrast, US data strengthened with resilience in the data. That said, a dollar CAD move to 139 would mark a top for us in the pair. Looking for higher USD CAD. A bit of an interesting one though. Probably not right now in terms of what we're seeing on the dollar. Possibly after, when Trump maybe has given some sort of deals out there or whatever, or been more affirmative. Sure. But yeah, right now, I would say more downside, in my opinion. There's just nothing telling me that I need to buy the dollar. I just don't want to buy the dollar, basically. So yeah, lastly, the yen. Swiss, I'm going to leave alone. I'm not really looking at the yen, though, is this. And I did see some good Bloomberg stuff about the yen. I did open up another tab, but I think I deleted it. Where was it? Yeah, it's this one here. So the yen is unlikely to snatch its recent weakness after the Bank of Japan held rates as expected, who saw the decision as slightly tilting hawkish. The currency did extend losses, dropping as much as 0.5% to They're talking about dollar yen, by the way. So it dropped, so yen strengthened. The BOJ earlier kept its benchmark steady. The central bank is monitoring the impact of the last month's hike on the economy. And here is just some of what the analysts have said. But before we do that, let's just have a good look at what ING mentions about the yen and the BOJ. The BOJ expressed greater confidence in growth and inflation, leaving the rate hikes open as an option. We believe the BOJ's upper revision of core inflation suggests it views the recent weakness of the yen as increasing inflationary pressures, and that there is growing confidence among the board members regarding wage growth. So obviously this is good for rate hikes. The only issue with markets is that they need to have a good idea when they're going to do it. So if they haven't got a good reason, or not a good reason, but if they haven't got like a good framework to work with, the markets just don't like that. And that's why we saw kind of a big old reversal. People just don't like, unsureness. They want some sort of good definitive answer. OAID comments remain neutral, so you can pause and read through this and just kind of see what they said. And the JGB sell-off sparked by proposals to cut food consumption taxes. And they're not easy to pinpoint the impact of tax cuts, so please read through that as well. Now, where are we over here? Let's just see what some people are saying. OAID enacted the BOJ put, which theoretically means the Japanese government bond yield should stabilize and the bond market volatility should diminish. It's evidence that Takaichi administration is monitoring the bond market closely and is concerned about the recent meltdown. It doubly reassuring that the BOJ is also demonstrating the same level of attentiveness. OAID kept his policy rate and stayed neutral, but his signal that the BOJ stands ready to use nimble bond operations to steady the market against extreme dysfunction gave JGBs a meaningful boost. Long end yields have now rebounded 20 to 30 basis points over the past 3 sessions, effectively retracing about half of Tuesday's sharp sell-off. It's a slightly negative for the yen, though, because it reinforces the BOJ's gradualism and keeps policy divergence in play. Basically, it just gives gives markets the willingness that they are slow and steady. Markets don't want that, right? They're like, oh, we want hikes. We don't want to be like, we're going to hike and then wait 6 months, hike again, wait 6 months, or wait 12 months, hike again. They like hike. We're happy for a month, hold, hike again, hike. Month, hold, hike again, right? The markets are happy with that. But what they don't like is where they hike and then they remain very relaxed and laid back and say, we'll monitor the data, we'll see what happens. They don't like that. And that's kind of what OAID did. He didn't give us a definitive answer. Obviously, they'll say they kept the doors open. They upgraded some forecasts, which is why it's slightly hawkish. But remember, we still have this political lower house, I think it is, in Japan, which should continue to weigh on the yen as long as we see for the foreseeable future. As a result, if you're going to trade the yen, trade it against basically everybody else apart from Canada and the USD, because you want to be going where there's the most value: AUD, JPY, pound yen, euro yen, New Zealand dollar yen. Those, to me, have the best opportunity for it to go higher. Whereas if you're trading that dollar yen or like CAD yen, there's just a lot of choppiness in that price in those pairs right now. And it's just something you don't want to be like. If you're buying dollar yen, you're basically saying that right now the USD is stronger than the yen, which obviously both are quite weak. So you don't want to be trading those pairs. You want to be saying AUD is stronger than JPY, which it obviously is. So only go with those pairs. Don't go for some Hail Mary sort of trade on dollar yen or CAD yen. Just go where the best opportunity is right now, which, as we all know, is in AUD and New Zealand and everybody else apart from Canada and the US. Lastly, gold. Obviously, gold is still benefiting in this unsure environment. Remember, gold only comes lower, as we spoke about on Tuesday, if we see positive affirmative updates. Because there's still a lot of tension, there's still a lot of pressure, this is good for gold. So as a result, remain bullish gold because it still hasn't got any reason for it to sell off. Remember, always think opposite to the reason it's so strong in the first place. So why is it so strong? Political pressure from the US. Dollar weakness is obviously good for gold anyway. And just trying to think as well, what else could be a big reason? Mostly that, I would say. It's mostly the political situation. And in an environment where there's political stress, no currency does well. Safe havens does pretty well. So yeah, again, if you want to trade the Swiss, you're more than welcome to trade the Swiss. But I think gold has the best opportunity there right now. So it should still continue. And then the moment we see some sort of real affirmative, positive updates, you'll know that because the market reacts very, very negatively on that with gold. Then you think, okay, where is the pullback going to come to? That's it. And then it eventually should go higher as well because rate cuts from the US. So apart from that, everybody, that is myself. Hopefully next week we have a lot more to talk about for the other pairs, but this week has been quite quiet apart from the US, and that's kind of what it's, and of course the BOJ. Apart from that, it's been quite boring in terms of other pairs out there because all they're doing is just following the US. So it is what it is, but hopefully next week we have a bit more to talk about. We just have to see. So apart from that, everybody, have a good rest of your weekend, and I will see you next week. Take care.